you. For now, it's time to get some corporate conversations going. Blue Star is in focus. Now, yesterday, the company announced an order win. It's a turnkey order in the MEP segment, which stands for Mechanical, Electrical and Plumbing. We have with us Mr. Advani, MD of the company, joining in. Mr. Advani, good to have you on Chartbusters, sir. So 500 crore rupees worth of orders. It's sounding pretty significant. And, you know, the accompanying press release also sounded fairly optimistic on this side of the business now. Can you tell us, first of all, where does your order book stand in the MEP segment with these new orders?
Sure. So I'll just give a little context of MEP and then I'll answer your specific question. Typically, a commercial or institutional building will have multiple MEP services: air conditioning, electrical, plumbing, firefighting, low voltage systems. These systems are typically engineered and installed by single service contractors. In fact, Blue Star has been a single service air conditioning contractor for over 50 years now. But about 10 years ago, we looked at the market and we decided to transform ourselves into a multi-service MEP contractor, similar to what happens in Europe or the Middle East, where you have large, tall, complex buildings being built. Over the last 10 years, we've built up this business, and today we've executed over 75 such MEP projects in the country. These three new projects are obviously significant. They're much larger in value than the earlier ones. Going forward, we see that 1 in 2 projects that we execute in Blue Star will be in this new MEP model. So to answer your question on the order book, the company's order book is about 2,010 crores as of June 30th. About 80–85% of that is now MEP projects for us. So it's quite significant for the company.
All right. And what exactly is the margin profile of this order, if you could give us some indication?
Sure. So our margins in this business have been about 4 to 5%.
Okay.
And these are after our overheads, and we expect to do slightly better than that on these projects going forward, because they have been booked at better terms, better costing, and we're quite confident that all 3 of these projects, 2 are IT parks and 1 is a 5-star hotel, all 3 will get done in a timely manner in under 2 years. And when we're looking forward to making some good money on them.
All right. So what exactly is the sort of growth that one can expect in the MEP arm of your business, the revenue growth for FY18 and FY19, as well as the margins? Should they be better than the 4–5% that you enjoy?
Yeah, so going forward, we're looking at small improvements, incremental improvements in the operating margin. One of the reasons why there will not be a step improvement is that demand continues to be slow. So I just want to put this in context. The overall MEP market is not growing even now because, as you know, commercial real estate, which is a key driver of this segment, it continues to be slow. We are seeing an uptick in inquiries in the infrastructure market, so that's metro, underground metros and airports, but that will still take some time to pan out. So given the muted commercial real estate market, the overall MEP market may only grow 2 or 3%. However, having said that, I think Blue Star is now the clear leader in the MEP space. We're winning market share from competition, and so we're confident of growing this business at least 15 to 20% over the next couple of years. So we're quite optimistic about the future of this business. And I think one other important point to note is that really what MEP does and what our value proposition does, which is superior project delivery, what really offers our client is an on-time delivery, a high-quality delivery, and that we're able to deliver the specification that is required by them. So I think all this put together is a great value proposition for our customers.
Okay, so Mr. Advani, then now let's talk about the rest of the business, the core AC business per se. Now that GST is behind us, what are the trends in the second quarter telling you in terms of volumes and also, you know, margins? Because the first quarter, there was a bit of a margin impact on the AC business. Has that kind of worked itself out now?
Mr. Advani?
Mr. Advani, can you hear us? Okay, I think we are having a bit of a connectivity issue. We'll try and actually reconnect with him. But just to recap what he has told us about the MEP business, sounding pretty optimistic and confident there. And these 3 new orders, as he explained, one is a 5-star hotel, 2 are IT parks. There, the margin value, the margin profile of these orders is actually better than what the company has been doing in the past. So 5% plus is what they are expecting. Let's see if we can touch base with Mr. Advani again. Veer, hi, good to have you back. So I was now talking about the AC side of the business. Can you tell us what the volume trends are, what the sales trends are looking like in the second quarter now that GST is behind us?
Sure. So July started off very slow, both for the industry as well as for Blue Star. August, now that we're through half of it, is looking a lot better. We're still not back to a normal level of primary sales. We can see the trade is still slow to align to the new GST model, but we're very confident that as we go into the festival season, starting with Onam, that we should be back to a normal level of growth. Now, what that means for this year, according to us, as you know, Q1 was poor for the industry. It was a flat growth for the industry in spite of a good summer, but GST threw that off. In Blue Star, we grew about 11% in Q1. For the full year, we think that the industry can recover, and we're expecting the industry to grow about 10% for the full year. And at Blue Star, we expect to grow 15%. So what's leading to this recovery, I think, is the trade is getting aligned. The OEMs like us are getting aligned.
All right. I believe that there is a bit of a connectivity issue out there, but tell you what, 10% AC industry, 15% Blue Star would entail that they might gain some market share. It was at 11%, and now they expect it to be at around 12.5% is what the guidance was. But keep an eye out on Infosys. Interesting flashes coming on the screen. Investec, the conference call organizer, has said that NR and Narayan Murthy, will postpone the call, which was due today, to August 29th. So that was an important development that the street was keeping an eye out on. Perhaps not too happy with that. The stock a bit off the high point of the day. We'll keep an eye out on all those things, but slip into a short break. We'll come back. We'll speak to the management of Monte Carlo, who joins us from one of the sidelines of the investor conferences.